In today's episode, I'm going to answer a question that I see posted in the comments almost every single day. Ross, how much money do I need in order to start day trading? Now, a lot of people will assume the more money you have in your account, the more money you can make each day. But in fact, that's not the case. If that were the case, then every successful trader, including me, would keep all of our profits in our account so our account balance would get bigger and bigger and bigger. And therefore, our profits would be exponentially increasing. But in reality, there is a point of diminishing returns when it comes to trading. But on the other hand, there's a minimum account size that you need in order to make enough money to actually cover your cost of living and to make all this time you spend learning how to trade worthwhile. So what is that sweet spot? I'm gonna share those numbers with you in today's episode. My name is Ross Cameron, I'm a full-time trader, and I funded my first account back in 2001, more than 20 years ago. So I've traded through a lot of markets, a lot of ups and a lot of downs, and I have turned a small account of less than $600 into more than $12.5 million in verified and independently audited trading profits. Now, I share that with you not because I want you to assume that my results are typical, because they're not, but because I want you to know that the person that you're learning from here today is credible, is qualified, and knows what the heck they're talking about. So let's jump onto the whiteboard here and begin plugging in some numbers to try to figure out that sweet spot of the minimum account size you need in order to generate enough profit to cover your goal. So let me start by asking you a question. What's your goal of how much money you want to make each month trading? When I got started, my goal was $4,000 a month, $1,000 a week, $200 a day. So let's just plug that in for starters. So my monthly goal was $4K, and that meant my daily goal was $200 per day. $200 a day is $1,000 a week, $4,000 a month. So then how does that translate to account size? So what kind of math are we going to do here? Well, maybe we need to figure out what the average percentage return is that I should be able to achieve. So what I know for myself is that whenever I do a small account challenge, I set an aggressive goal of growing my account 10% in one day. And that's a good day. So if I grow my account 10% in one day, I'm gonna be pretty thrilled. Okay, wow. Okay, so 10% in one day. So that means $200 daily goal. Well, geez, could I have an account with as little as $2,000 in it? With $2,000, 10% in one day is $200. I do that obviously 20 days in a row. I'm up $4,000. The account's now going to go from $2,000 to $6,000. But is it possible that $2,000 is my minimum account size? Well, that's sort of best case scenario because it's not realistic that I'm going to hit that 10% every single day. In fact, what I know from my own metrics, which I'm going to share with you in a moment, and you're going to look at the audited return, is that my average percentage return is actually 56%. And that's over the last 8 years, 56% average monthly return. So that means for me right now, based on those averages, in order to maintain a $4,000 monthly goal and $200 a day, I would need an account size of approximately $8,000. So let's go ahead and actually look at my audited investment return. So this is my investment portfolio that was audited as of the end of last year. So if we scroll down, what you're going to look at is my average monthly return. And this is going to be really helpful because even though the numbers are large, we're going to focus on the percentages. So over the last 8 years, right here, I have produced an average monthly profit of $131,000. And I have produced an average monthly return of 56%. Now, all of that has produced a little over $12.6 million in verified and audited profit. But let's jump onto the whiteboard here for just a second. Some people will say, Ross, my goodness, if you're doing an average of 56% per month, your account should be going like this. You should be able to turn $583 into billions and billions. But that would fall into the belief in this fallacy that the more money you have, the more money you'll make. When in fact, the limits of how much you can make are your strategy, your personal risk tolerance, and the liquidity in the market. So during this challenge, where I started with $583 and have grown the account to 12.6 million, my average position size has been 8,000 shares. So sometimes people will say, Ross, why didn't you start with $5,830 and turn the account into 100 million or 120 million? Why didn't you start with $58,000 and turn it into billions? Because if I had started with 10 times as much, instead of trading with 8,000 shares, I'd have to trade with 80,000 shares. If I did 100 times as much, I'd have to be trading with 800,000 shares on every single trade I take. Now, if you've been trading for a while, you know that that's just not possible. You cannot move in and out of the market with 800,000 shares on every trade you take. So to a certain extent, the limit in my profitability is liquidity in the market, but it is, of course, also my own risk tolerance and my strategy. So if I'm producing $131,000 a month, and that's a 56% return, then my account balance on average is what? Approximately $300,000. That's about right what I keep in my account. So $300,000, and I'm producing $131,000 per month. Now again, this is averaging, but here's what I do. I always draw my balance back down. I don't let my balance just grow and grow and grow and grow. So I don't, even though I've made over $12.5 million, I don't ever have $12.5 million sitting in my account. I take the money out, I take the money out. So for me, I'm able to achieve more or less this performance with about $300,000 in my account. So let's say rather than focusing on $131,000 a month in profit, we're focusing instead on 56% per month. Now let's again jump over to the whiteboard. So let's say instead of $300,000 in my account, I had an account with just $3,000. So then would my monthly goal be perhaps $1,500? Approximately, around 50%? Maybe. That might be more realistic. Now, what some of you are going to be quick to point out is, wait a second, Ross, how are you even able to day trade with a $583 account? What about this pattern day trader rule? So let's go ahead and pull up my broker comparison sheet. So some of you guys have watched some of my episodes where I've done these very comprehensive broker comparisons. This is a comparison of 17 of what I think are the most popular brokers for day trading today. And if we scroll down on this list, you'll notice that not all of these brokers enforce the pattern day trader rule. Isn't that interesting? Now, a lot of them do, but not all of them. So when I started my small account with less than $600, I was using one of the brokers that does not enforce the pattern day trader rule. But that's not the only way to start trading. You can start a number of different ways. So first, let's talk about what this pattern day trader rule is. The pattern day trader rule was put into effect on February 27, 2001, and it states that if you're going to day trade in a margin account, you need to maintain a minimum balance of $25,000. Whoa, that's a lot of money. Now, in those days, trades didn't settle overnight, but today, trades do settle overnight. So what that means is there's really two types of accounts that you can use, a margin account or a cash account. In a cash account, if you have $3,000 in the account and you buy 1,000 shares of a $3 stock, that's $3,000 position. You buy that, you sell it, it's a day trade, and you cannot trade again until tomorrow because that trade worth $3,000 needs to settle overnight. However, you could take 10 trades that are each worth $300 if you want, and so you could day trade 10 times in one day in a cash account. The only restriction in the cash account is that you have to wait overnight for your trades to settle. With a margin account, your trades settle instantly. So you can day trade that money all day long. You could just keep recycling it. So you could trade 1,000,000 times in one day if you wanted to. But in the United States, you need a minimum account balance of $25,000 in order to be able to have that instant settlement that you get with a margin account. But there's a key word there, in the United States. And the second key word is that it's only in a margin account. So this is what I've seen a lot of beginner traders do. What a lot of beginner traders will do is they'll look at this sheet and they'll realize, well, wait a second, Charles Schwab, Robinhood, Webull, a lot of these brokers in the United States that are known as commission-free brokers, you can open an account with as little as $1. There's no account minimum on a cash account. Now, are you going to be able to make a full-time living with a $1 account? The answer is no. But I'm going to tell you something. Starting with a small account is actually a gift. Less is more, because success in trading requires discipline. And there's no better way to learn discipline than to trade in a really small account. Because if you make mistakes, you're immediately going to blow up your account. But the process of blowing up that account, it's a $10 account, you blow it up, big deal. What's much more valuable and is worth more than the money you lost is the experience of, wow, I really have to follow the rules. So if you can make it in a small account, that to me is the ultimate building of a foundation that you can grow a career on. So I encourage you to start with a small account, to go ahead and fund an account with any of these commission-free brokers. And if you fund that account, let's just say, for instance, with Charles Schwab, you can use the Thinkorswim platform, and let's just say you fund it with $1,000. You've got $1,000 in there. You can now start trading, and you could day trade these stocks, any stocks that you want. You click the buy market button, and all of a sudden you're in one share. And now you get to see what it's like to actually practice trading. Now, as you're practicing and honing in on your strategy of choosing the right stocks to trade each day and where to get in and where to get out, you're going to begin producing your own historical data. So that was a trade where I made zero. I got in, I got out. It's a break-even trade. But you start taking dozens of trades a day with a cash account, with one share, you're not going to run out of buying power, right? You have enough money that you could take one share of all of these stocks. That right there cost $1.50. That one trade is I bought one share of a stock priced at $1.50. So now I still have, in this theory, $998.50 left to continue to practice trading with. So you get to practice every single day. Now, there's no question that if your goal is to make a living trading, you're not going to be able to make a living trading with $10 in your account or $50. You're going to need more money. But before you focus on how much money you want to make every single month and every single year, you got to focus first on building your strategy and learning and developing the skill of how to day trade. Now, those of you guys that want to learn more about my strategy, I will put a link. It'll be pinned to the top comment and linked in the description where you can download my small account strategy PDF. That's going to walk you through my 5 pillars of stock selection that I use every single day to decide whether or not I even want to take a trade. And this morning was no exception. This morning I pull up my scanners. I'm looking for stocks to trade, and we've got a couple stocks that we're squeezing up very nicely in the pre-market session. So I got a couple trades. I lock up $21,009.65, and my work is done. So if you want to learn more about my strategy for stock selection and the setups that I use for entries and the indicators that I use to know when to sell, make sure you download my small account worksheet. It's a PDF resource that you can implement in your own trading starting today. But I'm a big advocate of starting with a small account. So if we come back over here, let's just say, for instance, you've got that $3,000 cash account. So with a $3,000 cash account, let's just say you've got a monthly goal of $1,500. Now, is $1,500 a month enough to make a full-time living off of trading? I don't know. That depends on your cost of living. It may not be. Is it realistic as a beginner to make 50% every single month? Possibly not. But here's the thing that I've always thought with trading. Whenever I've done small account challenges, I always ask myself when I'm taking a trade, does this stock have the potential to give me a 10% return? And the way I trade is that if I see a setup that I like, I'm willing to put my whole account into it. Now, here's the way I manage risk. You might think, Ross, this is crazy. But let me tell you how I've done it. And I've been able to do this really well. Let's look at an example of a stock. I'm going to pull up a chart here from a trade that I took just today. So this is a stock that's squeezed up. I'm going to show you this. This is going to be on my slide deck right here. So this is a stock that's squeezed up right here. It squeezed up from $3.40 up to $4, up to $4.50. Then it pulls back. Now, this is a stock that had breaking news. The stock was on my scanner, so it's triggering my audio alert. And on this setup right here, I decided to buy it about $4.50. So let's just say I bought this at $4, and well, I did. But let's just say, for instance, I only had $5,000 in my account. I have a $5,000 account. So with this, let's just say I bought 1,000 shares at $4.50. So that's a $4,500 position I'm in right here. Now, what's my max loss on this trade? Typically, I would set a max loss of not more than 20 cents. So I'm willing to risk $200 on this trade. This breaks through $4.50 and goes all the way up to $5.40. That means the max potential on this trade was about $900. $900 of profit versus $200 of risk. Now that's nearly a 4-to-1 profit to loss ratio. We can work with that. And you don't have to be right, really, more than 50% of the time to be very successful if you maintain that type of profit loss ratio. So for me, what I focus is being very diligent about waiting for these A quality setups to form. And then when they form, I go ahead and I utilize my account as this tool, as this resource to buy this position, to buy as many shares as I can of this company where those shares are of value. I can turn around and sell them. I can either sell them at a profit if it goes up, or I can sell them at a loss. I decide before I take the trade how much I'm willing to risk in dollar terms. So while I took this trade, and you can see this is the exact stock I trade, I made $11,000 on this stock. So for me, I was willing to take bigger share size. So the increased profit was a function of willingness to take more risk and buy more shares, which naturally does require more capital in my account. But doesn't mean with a small account of $500, you couldn't have bought 100 shares and potentially made $45 or $50, which is a 10% return in that account. So I usually have the goal of, on a good day in a small account, I can grow it by 10%. That's a good day. Now, of course, some days will be a little bit better, but I sort of have this goal of trying to do 10%. Now, once my account gets bigger, I get up towards $200,000, $300,000. I'm not trying to do a full 10% every single day. That's where already I'm seeing diminishing returns, at least in terms of percentages. There's no question that you'll get the biggest percentage returns when you have a tiny account. You have a $3,000 account and you take a trade like this and end up making $1,000 or something like that, your account's up 33% in one day. That's awesome, but that's not gonna happen every single day. And of course, when you take risk, you've got to recognize that when you do take losses and you've got a smaller account, it's gonna be a bigger hit. But that's important because it's gonna teach you the discipline to cut those losses quickly. So for me, what my metrics have shown is that over the past 8 years, I've been able to average about 56% per month. So at the end of the day, that's like hitting that 10% trade only once a week. Although in my experience, when I've done small account challenges, it's those first weeks where I see the biggest percentage returns. Now, if we pull this back up, the first month when I started with $583, that was January right here of 2017, I actually turned that into 16,000 just in the first month, which, you know, in terms of percentage returns, if we go back up here, that was a percentage return of 2,746%. I mean, that's kind of unreal, but you can see that was my highest percentage return of the entire challenge. And then the returns got smaller as the account grew. But of course, the cumulative returns have just kept getting bigger and bigger and bigger and bigger to the point where less than $600 into more than 12 million is now over 2 million% return. And that's where some people sort of say, well, wait a second, you should have been able to make $1 billion. And that's where I have to correct them of those diminishing returns due to strategy, risk tolerance, and liquidity in the market. Now, if we jump back onto the screen share here, let me pull up that broker comparison sheet. Because one of the things that you may have noticed is that some of these brokers here do not enforce this pattern day trader rule. So for one, brokers in Canada don't enforce the pattern day trader rule. So if you're Canadian, there's no PDT rule. In fact, the PDT rule is only for US residents and it's only enforced by US broker dealers. But what a lot of people will do is they'll inadvertently subject themselves to the PDT rule by being international, but opening an account in the US, because all US broker dealers enforce the PDT rule, even if you're not a US resident. But here's another thing that you might not know. US residents can choose to open accounts internationally. International broker dealers who are not located in the United States also do not enforce the pattern day trader rule, even on US residents. So now, wait a second, that's how I was able to grow that small account. I funded it with $583 and I used an international broker dealer. They had a minimum account size of $500. So I was above the minimum account size and I was able to day trade as much as I wanted. So I wasn't limited to waiting for the cash to settle overnight. Now, this is what I'm going to tell you right now. These brokers, and they're listed here in green, the ones that don't enforce the PDT rule, Centerpoint Canada, of course, but CMEG, Ocean One, and Trade Zero, these are three brokers that are really popular. Only CMEG and Ocean One accept US residents. Trade Zero does not, but they do accept Canadians and they accept international customers. So all of the ones in green do not enforce the PDT rule. And these two are the only ones that don't enforce it and also accept US customers. So what that means is that all of a sudden, you've got a couple brokers where if you wanted to day trade with as little as $500 or $1,000, now suddenly you have the ability to do that. But let me caution you, don't get ahead of yourself. First, I really encourage you to prove that you can maintain the metrics of profitability trading, even if it's just one share, with a Webull account or with a Thinkorswim account. Prove that you can build that track record and then use that offshore broker just as a tool for a limited period of time to build up your cash balance above what? The $25,000 PDT minimum. And once you're above that $25,000, then you bring that money back to the US. So here's the deal. When you're below $25,000 and you're using an offshore broker, they charge fees and commissions. So they kind of have a corner on the market and they know there's no one else accepting US customers. So if you want to trade there, you're going to pay fees and commissions. Now, they're not outrageously expensive, but they do add up. So if you're a beginner trader using one of these offshore brokers, you're gonna kind of get burned on fees and commissions, and just the fact that as a beginner, you're gonna be churning, right? Make a little profit, have some loss, some profit, some loss. But with the fees and the commissions, your account's gonna go down. So I would encourage you to do all of that. Have that learning phase in a commission-free broker here in the US. Webull, Charles Schwab, one of these brokers. Now, if we go up to the top of this sheet, this is my broker comparison sheet. And in fact, Charles Schwab, as you'll see, gets a 4.9. And that's because I'm not in love with their Thinkorswim platform. If you're a small account trader, Webull actually has a much better platform. If you've got a $25,000 account, you could use Charles Schwab, and then you could spend an extra $175 or $200 a month on third-party software that makes it easier to use. But that's now adding a lot of expense for a small account trader. So for most small account traders, a broker like Webull is really gonna be great. So now I'm gonna turn this around on you. How much money do you need to start day trading? Well, it's not about coming to the table with a lot of money. In fact, what's far more important than the money is building the strategy. And you can do that in a simulated trading account for free. You could do it with a commission-free broker with $100 and practice with real money on the line. Sure, maybe it's only one share, but you're putting real money on the line. You're beginning to experience the ups and downs that come emotionally with wins and losses. And I think that's the right way to learn. So I think the best way to start day trading is to start with a smaller account. Force yourself to be disciplined. And don't jump into the market with one of these offshore brokers or with a full $25,000 account until you've first proven that you can maintain the track record and the metrics of success. Again, if you want to learn more about my strategy, check out that link pinned to the top comment and in the description where you can download my small account worksheet. It's a PDF resource. You can implement some of the tips and tricks that you'll learn in that resource in your own trading today, and I think you'll be really impressed. Thank you guys as always for tuning in. Reminder, my results aren't typical. Trading is risky, so please always practice in a simulator before putting real money on the line. I'll see you for the next upload real soon.